Hey everyone, the major levels I'm watching for next week on the SPY are the 575 level on the upside, the 580 level after that, and on the downside, the 560 level. These are going to be the keys, I think, depending on whether this narrow range that we've been trading in, we've really been trading for 2 straight weeks between 565 on the downside and 575 on the upside. So once this range breaks out, as I mentioned, 575 is a key level that we're watching. Once this range breaks out to the upside though, 580 is going to be the first target. You can see this is a dealer cluster zone, which is a potential zone where option dealers can really start ramping up their selling, increasing some selling pressure in the market. On the downside, the exact opposite. We have a dealer cluster zone where option dealers would probably step in as buyers. That's down here at the 560 level. Another level I want to point out that's very important is the 0 gamma level. That's the blue line that you can see here. And this has been where a lot of the price action has been trading over the last 2 weeks. And that's exactly what we would expect from a 0 gamma level. 0 gamma is basically the neutral point in the market as far as the options market is concerned. But really for the last 2 weeks, it has been between this 570 and 573 level. And if you guys have been watching our previous videos here over the course of the last couple of weeks, you've seen we've really been highlighting this kind of decision zone here in the market. And we think that this next week could be a key breakout. Just taking a quick look at a slightly more granular view here, we've filtered our data for the weekly time frame. So it's going to be Monday through Friday's contracts. So basically through October 10th, and you can see we have actually the 578 level and the 580 level here for next week. I'm inclined to think that the bias is to the upside in the market, and I'll talk a little bit more about why I think that here in a little bit. The largest gamma exposure on an absolute basis, however, is the 567 level. So it is possible we could see a retrace, maybe Monday or Tuesday back down into this level. This is natural support here if you just look at the price action over the last week. However, I think this would be an area where buyers would step in if there is some sort of retracement back into this level. But last Friday's activity was very bullish in my opinion, bouncing back after several days of downtrend and what looks to be like a potential another breakout zone here. We're almost there. And another reason why I also think next week has the potential to be bullish is because the lack of economic data. There's really not any U.S. data except for Thursday, which is some inflation data. And on Friday, we've got PPI and Michigan consumer sentiment. Really a quiet week in terms of economic data releases. As far as geopolitics go, I think this is always a risk. We could see an escalation. They rarely directly affect stock markets, but it is something to keep an eye on for sure. In terms of the S&P 500 heat map, last Friday, you can see technology services, financials, retail, everywhere that we want to see performing well for a bullish trend was in fact performing well on Friday, approaching all-time highs. These are the sectors that you want to see performing well, and those were doing well on Friday. So another reason why I'm leaning bullish heading into next week. If we just zoom out a little bit and check out the performance over the past week, a little bit more of a mixed picture. Technology was suffering earlier in the week. As far as the past week's performance goes, you really had to be a stock picker to hit some of these, right? We were actually in a few of these names like Meta and Netflix, and we're going to continue to watch for entry point in several of these other large mega cap tech names. So first off, on individual names, I want to take a look at Nvidia. Nvidia, you can see how well defined this 0 gamma line has been at the 115 strike. We're right back up to recent highs here at 125. A lot of volume coming in there at 125. That's the blue lines. The purple lines are gamma exposure, and the 130 strike which is our upper dealer cluster zone. Looks to be the magnet. That's what I'm looking for next week. We always have volatility associated with Nvidia, so it wouldn't surprise me to see some of that earlier on in the week. However, if it can keep that footing between 120 and 125, I don't see any reason why this 130 strike won't act as a magnet into next week and the week after. So that's going to be a big level that we're watching for, and we're going to be looking at probably some premium collection strategies in this 125 to 130 range on Nvidia. Next, I want to take a look at Nike. Several of these retail consumer-based names have been struggling quite a bit over this past year. Nike made a run up here earlier in September from the 75 all the way up to the 90 level here, but really had a bad week last week, coming back into the zero gamma level, and the gamma exposure concentrations are all lower at the 80 strike and the 75 strike, and we were seeing a surprisingly substantial amount of option volume coming in on Friday between the 80 and the 82 strike, as you can see here in these blue bars. And so I think any kind of bounce in Nike is a short opportunity, or at least an opportunity for premium collection, between the 85 and 75 range. And so obviously the higher in this range that it is, a broken butterfly or a skewed iron condor to the downside could be interesting from a risk reward perspective. Next, I want to talk about silver. Silver has been kind of under the radar, I feel like, for the last several months. We've been talking a lot about GLD. If you've been watching in our community Discord, a lot of us have been trading GLD over the last several months, but SLV is also picking up over the last several weeks, coming from the mid 20s now into the upper 20s. There's volume coming in pretty high at the 30 strike. I mean, this is well over 100,000 contracts just on Friday. So there's a lot of interest at the 30, the 31 strike, and the 32 strike, as you can see here. So, over the next few weeks, wouldn't surprise me to see this trend basically just continue into these higher strikes. There could be a little bit of a pause here in this 30 to 31 zone. This is a dealer cluster zone. So, it takes time for the market to basically reset as they hit into these major resistance zones. But that doesn't mean that it has to reverse to the downside. What it means, though, is that market participants are basically needing to readjust their positions, especially in the options market, potentially pushing out further out up the options chain later in time and higher. And so that's what we expect to happen here around this 30 strike. So we're going to continue the conversation this week in our community Discord. I'll put a link down in the description below. Come on in and say hi. We've got several free channels. Check out the conversation. We'd love to see you. Also, if you're interested in accessing our gamma exposure dashboard and option flow tools, head on over to geeksoffinance.com. You can sign up and become a member and get access to this amazing data set. Anyways, thanks so much everybody for watching. We'll see you guys in the next video.